Hey, so today I thought I'd go through what the market cycle top might look like for Bitcoin when you're seeing it through technical indicators and hard data, but also a focus on basically what the sentiment and what the emotion is actually going to feel like when you get there, so that you're actually prepared when we get there. So to be straight with you at the minute, I don't think we're at anywhere near what I would consider the market cycle top. For this cycle, I think we've got a ways to go, and I think it will probably be somewhere between 150 to about 200k would be my best guess, but that's not what I'm going to go through today. In terms of the indicators of, look, when you get to tops and major peaks in the cycle, you're looking out for a few major things. You can look at, like, obviously 10, 15 different indicators, but I tend to focus on the really big macro ones. Obviously, you can look at going to Bitcoin.com and look at Glassnode and all that sort of stuff, which will go over. But in terms of like stock to flow, 12 multiple golden ratio stuff, all of that sort of stuff will give you an indication that we're on the upper side and we're sort of like towards the overstretched limit. But what I like to use as well is, when we're on that monthly, RSI, we always tend to see massive peaks around that 90 to 95 RSI, and that sort of gives you an indication that in that moment, not necessarily that week or that day, but maybe this month or the next, within a month or two, that you're at some kind of big peak and you might expect some kind of correction. And then if you dial it down a little bit more down to the weekly, on that same RSI, that also tells you that you're at some sort of big peak where you can expect some kind of correction. Maybe not the absolute peak in like that run, but definitely that you're obviously fairly overstretched. So in these big ones over here, if you look at this at 90, we've got a big correction of 37%. All these massive peaks up here. Obviously, this one turned out to be a humongous 68% correction. Over here, we got this still. We went from 40 down to about 29, and that was another 30. But what you will tend to find between the weekly and the day and the daily sort of time frames, you can have a look at this on the daily, the 3-day, and any kind of time frame, but you will see the same pattern forming, which is when you get this divergence of price moving up and making higher highs, but on the RSI you're getting these lower lows down here, and that will basically give you an indication that price is weakening and you're losing momentum, and momentum is waning. So that's obviously what to sort of look at on a technical level that I tend to look out for. When I get to these zones, that gives me an indication of, I need to be aware of what's going on. So the monthly would tell you usually you're within 1 or 2 months of, some sort of sub-peak, typically. And then when you dial it down to the weekly and the daily kind of time frames, when you get like 1 or 2 or 3 divergences in price and it keeps making newer highs and weaker highs on the RSI, maybe like 2 to 4 times, that gives you an indication that maybe we might be due for a sharp correction and momentum is going. So that's one thing. And then the other thing that I want to really touch on that I don't think especially new market participants truly understand is what it really feels like to be at the top and bottoms of the market. Obviously the opposite is true of the bottom, right? When you're over here, but I mean, when you're at the top, you truly need to feel, in my opinion, what it is like. You need to truly feel that basically price will continue going higher, and then you basically, even if you have this sort of this bias of like, we're at these tops and I'm seeing these divergences, etc., because price comes down so quick and sharp. Typically, when Bitcoin kind of comes down in these big impulses down a lot quicker than you go up, so you take the stairs up and the elevator down, is what you tend to find is this is basically people sort of going, it looks like it's gonna go up, and then eventually kind of gets you, and then you join the bandwagon, and then they basically pull the rug underneath your feet. So when you are truly feeling that real FOMO, and let's say you were in the market at this point, for example, like 40k, and you sold somewhere around here, and then you're going, shit, it's just continually going up, it's going up, and then it really does mess with your emotion, especially when you're in the market quite a lot and you're kind of checking prices and whatnot. So essentially, that's basically how I would be looking at it. Is that when you truly feel that you're at the top, okay, or sorry, when you truly feel that price is going to continue going higher, and price has sort of moved a bazillion percent, and we've made like 1,600% from 3,000 up to 58, 60k, then that is usually when it happens, but you don't actually realise it until it does happen. So that's sort of how you want to think about it. And obviously, the other things to look out for is here. I bet that you found this with people around you started talking more about crypto. So when you look at Google Trends, you tend to get these big peaks as well. So maybe when we get a bigger Google Trend peak than what we did back in December 17 over here, and we sort of surpass that, then we can start again looking at that's basically new market participants coming into the market. And then basically what this is if you think about the way that the market cycles actually work, is over here you've basically got these new participants who are basically driving the price up. They're flushing more money into the market, and the people who are down here who are basically sitting on 10, 15, 20x returns are going to dump it, because if you bought down here and you're able to cash out for 15 times the money you put in, why wouldn't you do that? Okay, so yeah, so that's pretty much how that works. And then you need to get eventually some bag holders up here who are going to basically be holding coins that they've bought up here, and they've been promised that it's going to go to 80, 90k, because I can assure you around this time everyone was talking about 80, 90k. And yeah, and that's pretty much how it works, and they will pull the rug underneath your feet. But for the moment, I don't think there's anything to really to be worrying about at the minute. We're 58, and we can chop around here, but essentially the trend is essentially up. Yeah, so you basically need to truly feel that you are going to the moon, and you actually get these thoughts of like, do you know what, if I just hang on to this, then a little bit longer, and you try to squeeze every little gain out of the market, but you'll get this feeling that you're almost like a genius. You've done this thing that no one else has done, and that you're somehow this extreme just trading genius, and you're up a bazillion percent on paper, but you won't cash out because you feel it's going to go higher. So yeah, and remember, no one is gonna. You're not going to regret a decision if you sort of sell on the way up. This is why you need a proper plan, and you take 10, 15, 20x profits along the way. So I did something similar with ADA, where I had bought around here around the 5 to 8 cent mark, and I sold it at around $1.06 because it was so overstretched. And I could remember just going, everyone was just going, ADA is going to $3 instantly, $5 is the target, how quickly do we get to $10? And that was the narrative at the time. And I'm like, although it went up another 50%, 2x or whatever since when I sold it, I was happy that I sold it here, because I made the gains from here to here is the most important gain, because every 2x multiple at a higher price carries a lot more risk, and it's also harder to move the market, because obviously you need more liquidity and the markets are maturing and stuff like that. So yeah, so that's sort of one thing to look out for. And another sort of sentiment indicator to look out for is basically where the funding rates are, if you're keeping up with that. So if you have a look at previously with funding rates when it comes to Bitcoin, is you can see that when we get really overstretched on either side, it's usually time for some sort of reversion to the mean. So if you look at 2010, for example, so here we were pretty overstretched for a while, you can see here. So essentially what the funding rate is, if you don't know what it is this is the cost on futures platforms to actually hold a position. So it's costing you just in percentage terms, I think these as well, I'm not sure if these are daily, or every 8 hours. I've got a feeling that these funding rates every 8 hours. But it'd be literally it costs you 0.36% just to hold your position every single day. So when you get to these crazy peaks in the market, like up here, like there were some points where like it was literally, it's just absolutely balmy. Like it was costing like multiple percentage points just to hold long positions over here. So that basically means that everyone is going long. So that gives you an indication of whether this is favouring the bulls or the bears. Because essentially here on some exchanges, what you can do is you can essentially sort of just go short and just balance out like short on Bitcoin or something like BitMEX, and essentially you're basically in a neutral position, but you're actually accumulating more money just through the interest of holding a short position. So that's what people are basically going to do, because when the money becomes too easy to make, okay, essentially it's usually time for some sort of reversion to the downside at some point soon. So those are the things that I'd be looking out for. So you really need to truly feel these real emotions, and they will be real. So when you really feel it, and you actually probably start doing things that you shouldn't do, like you either start adding in more money towards the top because you're absolutely sure that it's going to go higher, and then eventually you'll probably, even if you're pretty good, you'll time it just you'll just be a little bit off, okay, and you'll probably think here, hey look, it's got to come down, it's got to come down, it's got to come down, and it'll be like, okay, well, it probably is just consolidating, and then bang, and then usually a month or a few weeks later, you're like, shit, if I'd have just waited and been patient and waited for my actual indicators and had that structured plan, which you should have, then you would have been in a better position, which is why you always need to be, in my opinion, taking profits along the way at key stages and obviously well thought out places. So yeah, so just that's my 2 cents on kind of what it will look like. So you'll get this big parabolic move for sure, but it will typically, I think, because you'll get this divergence in price, and that's where this will sort of tell you kind of what's going on. Whereas here, you'll get this sort of stair-stepping like this, and you'll get this one massive pump, which will be the last one, right? But I guarantee that there will be points where you'll hit a peak, and then people go, oh, that's the peak, and then it'll come back down, and then it'll pump up again, oh, that's the peak, and then it'll come back down, and it will do it like 2 or 3 times, because I guarantee between now and the next cycle top, there'll be about 20-30% corrections along the way, no doubt. I'm pretty sure of that. And eventually there'll be the one that is a really big drop where the market won't be able to recover from, and it won't be able to sustain that kind of momentum because it'll be going straight up and then it'll be coming back down. But there's a reason why markets are designed in a certain way where it always works out the same, where there has to be losers and there has to be winners at the end of it, okay? And because if it was that easy, everyone would just be basically drive the price up forever and everyone would make money, but it doesn't work like that, of course, right? So yeah, that's pretty much what what I'd be looking out for sentiment-wise, and some of the indicators I'd be looking out for towards the market cycle top. If you watch this video to the end, drop me a little comment below. Like the video, subscribe, and I'll try to put out a bit more content. And until the next one, I'll catch you next time.